back to Prime Wealth. We're so glad you're joining us today.
Yeah, it's great to have you here.
So today we're diving into a topic that really everyone can benefit from, tax-advantaged investing strategies.
Right? It's such a crucial part of financial planning, especially as we get older. You want to make every dollar work for you, you know?
Exactly. And a lot of folks feel overwhelmed by taxes and investing, but it doesn't have to be that way.
Absolutely. We're here to break it down, make it simple, and show you how to maximize your investments while minimizing your tax burden.
Yeah, and we'll cover things like tax-advantaged accounts like IRAs and HSAs, and maybe even touch on some strategies for, capital gains.
Oh, for sure. And we'll talk about how to align your investment choices with your tax situation, which is super important.
Totally. And we also want to share some real-life examples to make it all relatable. Because, it's one thing to hear about strategies, but seeing them in action just clicks, right?
Exactly. So stick around, because we've got some really valuable insights coming your way.
Yeah, let's get into it. So first up, let's talk about those tax-advantaged accounts. So, Alex, I think we should dive into why tax-advantaged investing strategies really matter right now, especially for folks over 40.
Absolutely, Jordan. We're at a point in life where many people are starting to think seriously about retirement, right?
Yeah, totally. And with the rising cost of living and, unpredictable markets, it's like people really need to maximize their savings.
Exactly. And I read a statistic recently that said nearly 60% of people over 40 feel anxious about their financial future. That's a big number.
Wow, that is a big number. I mean, it makes sense, though, with all the changes happening in the economy. And, many of us are also juggling responsibilities, like kids, college funds, or caring for aging parents.
Right. It's a lot to manage. And, it's crucial to make every dollar count. Tax-advantaged accounts can really help with that.
Sure. So can you break down why these strategies are so vital, especially at this life stage?
Well, first off, when you invest in tax-advantaged accounts, like IRAs or 401ks, you can defer taxes on your earnings. That means your money grows faster because you're not losing a chunk to taxes every year.
Yeah, that's great. So it's kind of like giving your money a chance to multiply without that tax hit, right?
Exactly. And for people over 40, they might be in their peak earning years, so they can contribute more to these accounts. It's a bit of a double win when you think about it.
Right. So if they're earning more now, they can save more in a tax-efficient way. But what about people who are, say, nearing retirement?
Good question. So for those nearing retirement, there's this added urgency to make the most of those tax breaks while they still can. It's not just about saving for today, but about creating a sustainable income for the future.
Yeah, and I can imagine that emotional impact. The fear of running out of money in retirement is real for a lot of people.
Absolutely. I've spoken with clients who are really worried about that. They often say things like, I want to enjoy my retirement, but what if I can't afford to?
That's a tough place to be. So what can help alleviate that worry?
Well, one strategy is making sure they're taking full advantage of employer matches in retirement accounts. It's essentially free money, and it really adds up over time.
Yeah, I've heard about that. So if you're contributing to your 401k and your employer matches, that's like a guaranteed return on investment, right?
Exactly. And then there's also the whole idea of Roth accounts, where you pay taxes up front, but then your withdrawals in retirement are tax-free.
That's super appealing, especially if someone thinks they might be in a higher tax bracket when they retire.
Right. And you never really know what tax rates are going to do in the future either. So having that tax-free income can be a real lifeline.
Totally makes sense. And I was thinking about the trend toward early retirement that's been happening lately, like the FIRE movement.
Yes. And that's where tax-advantaged accounts really come into play, too. If someone wants to retire early, they need to build up a substantial nest egg, and that means investing wisely.
Right. So it's not just about saving. It's about having that money work for you, efficiently.
Yes! And there's also the emotional side of it. People are often more motivated to save when they see their investments growing without the drag of taxes. It feels empowering.
Yeah, it's like you're taking control of your financial future.
Exactly. And, I've seen clients who start using these strategies and they become more engaged in their finances. They feel more confident, which is really inspiring to watch.
I love that. And what about those unexpected expenses that come up as we age? Like, healthcare costs can be a big concern, right?
Oh, definitely. Healthcare can eat into retirement savings if you're not prepared. Having a solid tax-advantaged strategy can help buffer those costs.
So by maximizing tax-advantaged investments, it can provide some peace of mind for those unexpected expenses down the line.
Exactly. And it's all about planning ahead. I encourage clients to think about their long-term goals.
Yeah, it's kind of like building a safety net, right?
Yes. And it can make a huge difference in how you feel about your financial future. You want to be able to enjoy life without that constant worry.
Absolutely. And I think it's really important for our listeners to know they're not alone in feeling this way.
Right. Many people share those concerns, but taking proactive steps, like using tax-advantaged strategies, can really help.
So I guess the takeaway here is to start thinking about how to optimize your investments for both today and tomorrow, huh?
Exactly. And there are a lot of strategies out there that can fit different situations.
Yeah, I can't wait to get into those strategies next.
So Jordan, today we're diving into tax-advantaged investing strategies, which is super important for folks over 40, right?
Absolutely, Alex. I mean, as we get closer to retirement, it's crucial to make our money work for us in the most tax-efficient way possible.
Exactly. So let's start with the basics. A popular strategy is using tax-advantaged accounts like IRAs or 401ks. Do you want to break down what those are?
Sure. So with a 401k, it's like you're getting a tax break right away. You put pre-tax money into your account, and that reduces your taxable income for the year. It's a win-win, right?
Yeah, right. And then you don't pay taxes on that money until you withdraw it. Usually in retirement, when your tax bracket might be lower, that's a big deal.
And then there's the traditional IRA, which works similarly, but with some different contribution limits and rules.
Exactly. And don't forget about the Roth IRA, which is another great option. You pay taxes on the money before you contribute, but then, when you withdraw it in retirement, it's all tax-free.
Right. So if you think you'll be in a higher tax bracket later, the Roth can be especially beneficial. It's all about planning, isn't it?
Yes! And another thing to consider is employer matches in a 401k. If your employer offers that, it's like free money.
Totally. If they match, say, 5% of your contributions, you should aim to contribute at least that much to maximize your benefit. It's just smart investing.
Right, and then there's the contribution limits to keep in mind. For 2023, you can contribute up to $22,500 to a 401k if you're under 50, and $30,000 if you're over 50, since they offer that catch-up provision.
Yeah, and for IRAs, it's $6, $500, or $7, $500 if you're over 50. Those catch-up contributions can really help boost your savings.
Exactly. And let's not forget about health savings accounts, or HSAs. They're often overlooked but can be a fantastic tax-advantage tool.
Oh, definitely. HSAs allow you to save money for medical expenses, and contributions are tax-deductible. Plus, the growth is tax-free, and withdrawals for qualified medical expenses are also tax-free. It's like a triple tax advantage.
Right. Just remember, you need to be enrolled in a high-deductible health plan to qualify. But if that's you, it's worth looking into.
For sure. And then there's the option of investing in tax-efficient funds, right? Like index funds or ETFs.
Yes, those tend to have lower turnover rates, which means fewer taxable events each year. So you can keep more of your money working for you.
That's a great point. It really adds up over time. I think people sometimes underestimate how much taxes can eat into their returns.
Absolutely. And speaking of returns, let's talk about asset location. It's a strategy where you place your investments in the right accounts based on their tax treatment.
Oh, I like that. Like putting bonds in tax-advantaged accounts because they generate interest, which is taxed as ordinary income.
Exactly. And then keeping stocks in taxable accounts, since long-term capital gains are taxed at a lower rate. It's all about being strategic.
Right. It can make a huge difference in your overall tax bill. And I think it's also important to regularly review your investment strategy, especially as tax laws can change.
Yes, staying informed is key. You don't want to be caught off guard. And one last thing to mention is tax loss harvesting. It's a helpful strategy to offset gains.
Can you explain that a bit more?
Sure. So if you have investments that have lost value, you can sell them to realize that loss. And then you can use those losses to offset any capital gains you've made during the year.
That's really smart. It's like a way to balance out your taxes.
Right. And you can even carry forward those losses to future years if you don't have enough gains to offset. It's a handy tool.
Wow. There's really a lot to explore when it comes to tax-advantaged investing strategies. I hope our listeners are taking notes.
Me too. And remember, it's all about making informed choices and planning ahead. That way, you can enjoy a more comfortable retirement.
Exactly, Alex. But before we wrap up, we should definitely touch on some common pitfalls. There are always things to watch out for.
Absolutely. Let's dive into that next.
So, Alex, let's dive into some of those common pitfalls people hit when they're trying to use tax-advantaged investing strategies.
Yeah, absolutely, Jordan. I think one of the biggest mistakes I see is just not understanding the rules of the game. You know, tax-advantaged accounts like IRAs or 401ks have specific guidelines, and if you don't follow them, it can really backfire.
Right, like when people accidentally over-contribute to their IRAs. I've heard that can lead to penalties, which is just, frustrating, right?
Exactly. So let's say someone thinks they can just throw in a little extra money because they had a good year, but then they find out they have to pay a 6% penalty on that excess contribution. That's a tough pill to swallow.
Wow, yeah. I can only imagine the feeling when that realization hits. So how can folks avoid that mistake?
Well, the key is to keep track of your contributions throughout the year, you know? And be sure to familiarize yourself with the annual limits. And if you're ever in doubt, just reach out to a financial advisor or even your plan administrator. They can usually help clarify things.
That makes sense. And I think another common pitfall is not considering the long-term implications of their investment choices.
Yes, that's a big one. A lot of people focus on the short-term tax benefits, but they don't think about how their investments will perform over time. Like, they might choose something just because it sounds good now, but it could have high fees or poor growth potential down the line.
Right, and that can really eat into your returns, can it?
Absolutely. I once worked with a client who was really focused on minimizing their taxes in the short term, so they picked a fund with high management fees. They didn't realize those fees were gnawing away at their returns year after year.
Ouch! So what should someone do instead?
Well, it's all about balancing tax advantages with overall investment performance. Look for low-cost index funds or ETFs that not only fit your tax strategy, but also have a solid track record for growth. You know?
Totally, yeah. And I think a lot of people forget to review their investment strategy regularly, too.
That's such a good point. Life changes, markets change, and so should your strategy. You might be in a different financial situation, or your goals might have shifted.
Exactly. I mean, if you're not taking the time to reassess, you could be missing out on better opportunities.
For sure. I had another client who was still heavily invested in bonds because that's what they thought was safe. But they weren't keeping up with inflation, and their returns were stagnant.
So what did you suggest?
We had a good chat about diversifying their portfolio, considering some equities that might provide better growth potential while still keeping some of those safer investments.
That's a great approach. Balancing risk and reward is so important, especially as we get older.
Yes! And speaking of age, another pitfall I see is people waiting too long to start investing in tax-advantaged accounts.
Oh, definitely. I mean, it's never too late to start. But the earlier you can get that money working for you, the better, right?
Exactly. I had a client who put off contributing to their 401k for years, thinking they'd catch up later. But by the time they started, they realized the power of compound interest had already slipped through their fingers.
That's such a valuable lesson. So what's the takeaway here for someone listening who might be feeling that pressure?
Don't wait. Even if you can only contribute a small amount, just start. It builds good habits. And over time, even small contributions can add up significantly.
And let's not forget about the importance of understanding your tax situation as you invest.
Absolutely. Some people think tax-advantaged accounts are a one-size-fits-all solution, but they really aren't.
Right. For instance, if you're in a higher tax bracket now, maybe a Roth IRA makes sense. But if you expect to be in a lower bracket later, traditional accounts could be better for you.
Exactly. It's all about personal circumstances. You really need to consider your current income, your retirement plans, and your overall financial goals.
So what advice would you give to someone who realizes they've made some of these mistakes already?
The first step is recognizing it and being willing to adjust your strategy. It's never too late to pivot. Maybe you need to reallocate some investments, or even catch up on contributions if you can.
Yeah, it's definitely about taking proactive steps rather than just feeling stuck or overwhelmed.
Exactly. And sometimes just having a conversation with a financial advisor can help clarify things. They can provide tailored advice based on your specific situation.
And I think it's important to remember that you're not alone in this journey. We all make mistakes, right?
Yes. And the important thing is to learn from those mistakes, take action, and keep moving forward.
For sure. So for everyone listening, remember to keep an eye on your contributions, reassess your strategies regularly, and don't hesitate to seek help if you need it.
And above all, stay informed and engaged in your financial journey. It's your future after all.
Well said, Alex. So what's coming up next in our series?
We'll be discussing some actionable steps to improve your investment strategies and really make those tax advantages work for you.
Awesome. Can't wait to dive into that next time. So, Alex, we've talked a lot about tax-advantaged investing strategies today. But what can people do, like, right now?
Absolutely, Jordan. I think the first step is to really understand your current situation. Take a good look at your income, your expenses, and your overall tax situation.
Yeah, that makes sense. So, what do you recommend they do first?
Well, I'd say start by checking your retirement accounts, like a 401k or an IRA. If you haven't maxed those out, you might want to consider, increasing your contributions.
Right. And for those who don't have a 401k, what's an alternative?
Great question. You can open a traditional IRA or a Roth IRA. Both have their benefits, and, they're great for tax advantages. Just make sure you're aware of the contribution limits.
Oh, totally. And I think a lot of people don't realize they can contribute even if they're self-employed, right?
Exactly. If you're self-employed, you could set up a SEP IRA or even a solo 401k. Those options can allow for higher contributions.
Wow, that's really useful. So once they've got their accounts set up, what's next?
Next, it's all about diversifying your investments. You want to look at things like index funds or ETFs that track the market. They're generally low cost and tax efficient.
Right, and those can be really good for people just starting out because they don't require a huge investment, do they?
Exactly. Many platforms allow you to start with small amounts, even as little as, $100.
Speaking of platforms, I've heard about apps that help with investing. Do you have any recommendations?
Sure. Apps like Betterment or Wealthfront are great for beginners. They offer automated investing and tax loss harvesting, which can help optimize your returns.
Oh, yeah. I've heard of those. And they're pretty user-friendly, right?
Definitely. They walk you through the process so you don't feel overwhelmed. And they often have educational resources built in, which is a big plus.
That's awesome. Another thing I think is important is keeping track of expenses. What tools do you suggest for that?
Good point. You might want to try apps like Mint or YNAB. You need a budget. They help you monitor your spending and can also, help identify tax-deductible expenses.
That's a great way to stay organized. And keeping your finances in check can help you make smarter investment decisions too, right?
Absolutely. It's all about building those habits. And, regularly reviewing your financial goals is key.
So, how often should someone check in on their investments and overall financial situation?
I'd say at a minimum, every quarter. But if you're just starting out, maybe even once a month to build that routine.
Yeah, that makes sense. And it keeps you engaged with your finances, right?
Exactly. And don't forget to take advantage of any employer matches if you have a 401k. That's free money. You don't want to leave that on the table.
Oh, for sure. And if someone's not sure about the investment options, what should they do?
I recommend talking to a financial advisor, like someone who specializes in tax-advantaged strategies. They can help you create a plan that matches your goals and, your risk tolerance.
That's solid advice. And it's okay to start small, right?
Absolutely. You don't have to dive in all at once. Start with what you can, and as you become more comfortable, you can increase your contributions and diversify.
So it's really about taking those small steps and building confidence over time.
Exactly. And remember, every little bit adds up. It's more about the consistency of your actions than the size of your initial investment.
I love that perspective. And what about books or resources that people can check out?
Oh, there are some great ones. The Intelligent Investor by Benjamin Graham is a classic, and The Simple Path to Wealth by J.L. Collins is super relatable and straightforward.
Those sound perfect, and they're both, easy to digest for someone who's just starting out.
They really are. And, joining community forums or local investment groups can also provide support and encouragement as you learn.
So it's all about creating that supportive environment and surrounding yourself with the right resources.
Exactly. And don't be afraid to ask questions. Everyone starts somewhere, so it's perfectly okay to seek help when you need it.
Such a great reminder, Alex. So to wrap it up, what's one final piece of advice you'd give to someone looking to start tax-advantaged investing?
I'd say just take that first step. Whether it's setting up an account or reading a book, the key is to get started. You've got this.
Yes, you really do. Thanks so much for sharing all this valuable information today, Alex.
My pleasure, Jordan. I'm excited for everyone to take those steps toward their financial future.
And that's a wrap for today's episode. Thanks for joining us on Prime Wealth. And remember, take action today for a better financial tomorrow. Wow, what a great conversation we just had about tax-advantaged investing strategies, right?
Yeah, absolutely, Jordan. I think we really covered some important points.
So let's recap a few of those key takeaways for our listeners.
Sure. First off, we talked about how utilizing accounts like IRAs and 401ks can really help you grow your investments without the tax burden,
Right, and then there's the whole idea of tax loss harvesting, which is a smart way to offset gains and reduce your taxable income.
Exactly. And don't forget about the importance of understanding capital gains taxes that can really impact your overall investment strategy.
Yeah, and it's also key to stay informed about changes in tax laws because, they can affect your plans, right?
Definitely. And finally, we touched on the benefits of working with a financial advisor to help navigate these strategies.
For sure. It really makes a difference when you have someone experienced guiding you through those complexities.
So remember, folks, investing wisely and taking advantage of these tax strategies can really set you up for a more secure financial future.
Absolutely. You've got the power to make informed decisions, so keep pushing forward. You're doing great.
And if you found today's episode helpful, do us a favor. Like, subscribe, and share your thoughts in the comments.
Yeah, and don't forget to share this with someone over 40 who might benefit from these tips.
Next time, we'll dive into a really exciting topic, investing in AI and tech stocks.
Ooh, I can't wait for that. It's going to be a fun discussion, so stay tuned.
Thanks for joining us today, everyone.
Yeah, thank you. Take care, and we'll see you next time.